All right, folks, another week. Ho, 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 almost. This is our last Ask Me Anything happy hour. We do so many shows on Wednesday. I forgot what one this was. But our last Ask Me Anything happy hour of 2024. As you can tell, the entire team came fully prepared with all their Christmas goods on. I did not. But Vivi's got her Christmas stuff on, or at least reindeers, right, Viv? You wearing some reindeers? Well, we are here today to answer your questions. That is what we do each and every single week. So get your questions ready. We'll be right back after this.
Daddy, what is it?
Okay, say, ask me anything.
Merry Christmas.
Merry Christmas, Viv.
Viv, we're here to answer everybody's questions, and this is the last one of the year, so we're telling them Merry Christmas and Happy New Year. And hey,
I love your sweater. It's so cute.
Give me that. Stop. Hey, tell everybody BYOB. Be your own bank.
BYOB.
And then be your own banker.
Your banker.
Good job, Viv. All right. Okay. Well, let's start from the top. Shauna, you want to start going around, and we'll just give everybody's intro?
Yeah. I'll start one. From What the F this morning, we got some emails all about the experience. And some people didn't realize that mastermind events and traveling and all that stuff is actually a business deduction or a business expense. And so it was really nice of you to shed light on that, Chris, because it was also from like people who've already gone to some of our trainings. And I was like, you better make sure that you write off those tickets at those prior events, like the Money Tank and stuff like that. So
education, baby. That's a write-off. I mean,
Yeah,
they got to consult with their CPA. Can't give tax advice, but my CPA said it was.
And it's the intent to do business. So technically you can go somewhere as long as you have the intention to do business, to grow your business or anything like that. That's what matters. So definitely, I know we're going into Christmas. I know we're going to go dark over 2 weeks. I do really want you guys to keep messaging me about Sundance though, because I do have one deadline of like the first week of January. All the rooms that we have get released. So if you're thinking about coming to the experience, coming to Sundance, and you like say decide after the first week of January, even though it's not like until mid-February, then you kind of run the risk of if there's a room available, because it is a beautiful place and it might get booked up. So we definitely want to get you in, and also before year end if you can. But that's me.
Peak season too. That is like peak season. So you got a really strong chance if you don't get in before January 1, or those room blocks might not hold. I mean, we might not have any rooms.
Well, I guess I'll kick it off. Hey everybody, Brian Fouch here. Yeah, guys, get your questions in there. I'm hoping I'm going to be able to make it through this whole thing. The lights have been flickering. We got about, 8 inches of snow last night, and then it started raining this morning. So all of it's been coming down. My lights have been flickering. Actually, I went off sometime this morning. So hopefully it stays on. But I'll pass it on to, Chris, you already talked. Let's go, Carson.
What's up, everybody? Coming here from Southern California. Got a lot going on this month. I'm actually really excited. In a couple days, I'm going out to Fiji.
What?
Going to Tavarua. Chris, you know Tavarua?
Shut up.
Yeah,
and you didn't send me a ticket for Christmas? Shame on you. Tavarua, man.
Tavarua is like one of the most prized surf spots in the world. It's a really cool little island off of Fiji. And so we're going to go for a week and go surf. So we're pumped about that.
That's
when incredible. Are you going, Kirsten?
We're going in a couple days.
Oh, Merry Christmas to you. Cool.
Yep. Merry Christmas.
Oh,
so
be young again.
Gonna be out all next week pretty much, but it's gonna be good. It's gonna be super fun, and then we'll come back refreshed to start the year.
Nice.
Let's get over to Linus.
Hey everybody, Linus Nolt here from Hopkinsville, Kentucky. Discovered I don't really have anything Christmassy in my house, so I just stuck a towel down my shirt. It looks okay. And hanging out here with me. But yeah, you guys, I'm happy to be here and answer any questions and provide any insight I can. It's a wet day out here in Kentucky, but I'm having fun, getting work done, helping as many people as I can. Stephen, what's up with you?
Hey, ho, ho, ho. Merry Christmas. Just checking in from South Florida where we have the snow coming down outside. We got all the reindeer out front eating their feed, getting ready for the big day next week. So we're just having some fun here and ready to answer all your questions. Ho, 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 ho.
Over to Gabe. Hello, Gabe.
My turn. Hi, everyone. Gabe Britanna in Newmarket, Maryland, here at my jiu-jitsu school, getting ready for some classes tonight. Excited to be here. I always learn a lot. Just being here, learning from the other money mentors. Pass it over to Jason.
Thank you, Gabe. Here from the city, beautiful. Like Steven said, it is snowing and it is, accumulating quickly. The drifts are piling up on the sides of the cars. I'm hoping I can get out and go to Taekwondo later. I'm not sure. I'm going to do my best. During this Christmas season. So up to Mr. Craig Yenny with the Penguin next to him. Yenny, you are on mute. First time you've done this. It's okay.
I'm back. The technology stuff's new to me. I am Craig Claus Yenny from Denver area, and I got my friend here, the Penguin. I'm taking the Penguin up to the mountains tomorrow to go skiing because there's just no snow down here. It's all in Florida. So we're going on up to Copper Mountain, can do some what Carson would call surfing. It's snow surfing, or we call it skiing out here in Colorado, but that's what we got going on out here in Colorado. Down to Carson.
I already went. We kind of doing.
You went. So who hasn't gone yet? I think
surfing in Fiji. We're ready to rock and roll.
And maybe Gabe.
Gabe went.
We went all around.
Let's get
It's funny that all the Floridians are talking about snow as if they know what the hell the white stuff even is. I think you're thinking of a different kind of snow. Up here, we call it cocaine. You guys have that problem.
Miami definitely knows.
You could have had on WTF today, Chris. There was like 9 kilos that washed up on the shore, and the police actually said, to whoever lost this, please come and claim it. So
wow. Well, up here,
that was more towards snagging.
Up here, you don't need anybody to say, come claim this. You actually need to pay people to come plow your driveway, shovel your sidewalks. It is a winter wonderland. It's been coming down all day. We went from like 50 yesterday to now just complete blanket of snow. It's beautiful out. Shauna's showing you kind of behind in her windows. You can kind of see it. Like we got about the same amount up here. Yes. So we will be slope side this weekend.
It looks just like Orlando, except it's 80 and doing that here. It's weird.
So Jason and Stephen, do y'all Floridians also just go out and completely buy out all the milk and bread in the stores when this happens?
Yeah.
They've got their own goats. They don't need to go buy milk. They've got their own goats.
They just milk the goats. All right, we probably should get into some questions.
We have a couple, so we only have 2 questions right now. So we are pretty wide open.
Before we dig in, just for the record, the market, the Fed came out and decided on a 1/4 point interest rate drop. What was expected? But the big news was they are kind of angling towards a lot less cuts next year than they originally were planning. And that's a lot of reason because inflation continues to run strong and they're kind of stuck. The banks have all this money. Trump's wanting to do all this stuff with the economy. But if they do that and the government continues to spend the way it's going to, inflation is going to be out of control again. So they can't really drop rates. We need to tackle government spending. But nonetheless, the Dow responded down today, 1,123 points or 2.58%. Bitcoin's down almost 5% of the day. Tesla's down almost 10% of the day. So everything dropping like a rock right now. The S&P down almost 3%. And it just officially the 10th straight day of downward trading in the Dow, which I believe is the longest streak since 1974. But I'll verify that in a minute.
And if we get one more day, like if it's one more day of negative markets, that'll like literally set records.
I think that was today or maybe tomorrow. But yeah, to your point, Chris, and And we talked about this morning, all those drones. Everybody's got their eye on the drones. Hey, look at the drones. Don't worry about the market completely crashing right now. Nothing to see here, guys. It's Christmas time. So
I've been telling everybody, like, you know, listen, like they're just going to pull the rug out. And like, this is just the first sign of it. I mean, Fed drops rates, you know, the amount that we all thought they were going to. The markets are like in pandemonium on what's going on. I mean, it's just a house of freaking cards like I have never seen, a bubble like I've never seen. I feel like we need to do another WTF, you know, like all over again with all the news that has happened from the morning till now. And not only that, you're out there in California, Carson, and you're the only one, but your awesome governor has declared a state of emergency for bird flu. I think one person got like a severe case of bird flu. So your whole state's like in lockdown. So good luck getting out to Tabarua, man.
No surfing for you, Carson. No surfing.
Governor's not going to let you get out of there, man. It's bird flu season.
I actually safe. Oh, that's funny.
Yeah, it's real funny.
The eyes of his penguin. He doesn't want his penguin. Cover the ears, man. The penguin doesn't want to hear this.
It's definitely funny. You know, us Northerners up here in New York looking over there at you guys in California going, what? Are you guys in a competition with Hochul up here in New York as to who's the craziest batshit person there is in the world? Like, you guys are taking the cake, man. Oh. Bird flu. How many years has this bird flu thing been around? Like, this is not even new. It's like, can't they be more creative and come up with something like new and exciting? Bird flu?
Yeah, like the bat flu. Just kidding.
Yeah, I mean, at least change the name. It's a crow flu. Like, you know, give it some dimension here. Like, then we can envision like the black crow and the flu, and they're like, everybody's gonna die. Oh my god.
How about maybe we can bring back the mad cow disease?
Yeah, mad cow.
Oh yeah. I mean, hey, come on. I mean,
I want to bring it back.
We could do instead of mad cow, how about mad goat?
I want to bring it back.
I'm cutting you guys off. Okay, who drank the eggnog? What's going on here?
I want to bring it back to the market.
I'm just waiting to see that number go up. You see, when we start talking like WTF, the numbers go way up. Look at the viewership; it just skyrocketed.
Yeah,
all right, let's get into the questions.
Bring it back to the
goat
market.
Flu, crow flu, bird flu. Let's get into it.
If only there was something. If there was a way to control your money that wasn't inflationary, where you could actually control it, where it'd be away from. If we knew something like that.
Bitcoin.
Imagine how successful we'd be and help people. It'd be crazy. If only.
All right, Shauna, you're gonna have to step in and take over.
All right, I got a couple.
You guys see this shirt though? Look at these little flamingos with Santa hats. I mean,
flamingo flu.
Oh, that is good.
There it is. Flamingo flu.
Flamingo flu sounds good.
Coming to you. And if you guys need to email me, my email's right there. We're good.
I think I need my tie. I'll be right back.
All right. Well, our first question is from Brent. What up, Brent? He's saying, how do I get a hold of Linus? I want to follow up from a conversation that we had in Nashville. And
I will tell you, getting a hold of me, you can figure that out once you catch me. So yeah, just keep that in mind.
Yeah, true that. But email him, Linus@themoneymultiplier.com. He'll email you in the new year. How about? Okay. Paul Dunbar saying, if you were to put the best 4 mutual insurance companies in order from best to good, how would that go?
Ooh, great question.
I mean, it's going to get different answers. I'll take a stab at this one. I'd say best would be One America because of service and support of the infinite banking concept. Second, I want to say Lafayette Life, although I have some.
Gotta be Lafayette just from the pure design standpoint.
Yeah, so I'm going Lafayette. And then third, I'm going to go Security Mutual. Fourth, I'm going to go Mass Mutual. Fifth, I'm going to say Guardian. And if I had to add one underneath, that's would it be America? No, Foresters.
Or Penn, maybe.
Oh, Penn.
No,
Can you say that one more time in order real quick?
I said One America, Lafayette Life, Security Mutual Life. Love that company. Mass Mutual, Guardian, and then I would say Foresters. I'm not a fan of Penn Mutual.
Yeah.
And the more kind of alternative answer is it depends on what you're trying to accomplish. Each company has different products, and depending on what you're trying to accomplish, that order might be different for each person. So, and if you're in New York, it's a pretty short list.
Oh yeah, in New York, it's Security Mutual, Mass Mutual, Guardian.
Yep. And I just did a Security Mutual one, and it was awesome. They you know how to build them. They can be very good.
There is no company that is better to deal with from a servicing standpoint, like from a pure consumer standpoint, than Security Mutual. Even better than One America, because like you get somebody on the phone and they are just so freaking dialed in and nice. Had a policy with them for like 10 years now.
Nice, man. Nice. I like your lighting, Shauna. The lighting looks good in your studio.
Yeah.
Thanks. It's very red. I love it.
Biohacking.
Mark Perry said that just to your guys' comments earlier that metals are down too. Excellent time to purchase.
Yeah, there's a lot going on. I've been reading, Mark, a lot about the metals thing and gold specifically. There's been tons of articles out there about that. A lot of reasons that gold is going down right now, but I'd say it's still a bit early to buy. But yeah, if you're dollar cost averaging, this is the time to get some.
I've actually been in talks the last couple of weeks with my mentors when it comes to precious metals and making a plan to kind of start bringing it back in 2025 because I think it's going to be a good time to start buying again. I mean, I never stopped over the last 4 years, but.
Mark's also asking, why is TLT down?
Sorry, had to give Vivi a credit card to have her go try to unlock the door. All right, so TLT, this is a common question. Everybody's like, hey, interest rates went down. Why is TLT down, not up? It's a knee-jerk reactionary thing. Now, the thing that a lot of people don't understand about the way stock prices move, and especially TLT is just like anything else. It's going to move based on a lot of speculation. So the speculation based on the Fed's move today is saying that there's a lot of risk in the near term. So because of that, what happened today with TLT or all treasuries is the yield spiked. It's probably not going to hold, but the yield spiked, which brought the price of those down. The best advice I could give all of you right now is buy. If you got money sitting in cash, you should be picking up more to dollar cost average that price down. Matter of fact, I'm going to do that right now too, as we're talking, because that's definitely what all of you should be doing. It's a very kind of weird reaction, but it's literally knee jerk and more just saying that there's a lot of risk in the near term with inflation.
All right. Andrew Hansen is saying, can you discuss policy gains versus borrowing interest? So arbitrage, spread, or lack of.
So they're talking about the dividend rate versus the loan rate. I mean, I'll take a crack at this one. I mean, I look at them very differently. I mean, one is ongoing, not uninterrupted, always there. The loan rate is there only when you borrow, and you can actually control that loan rate by how you handle the loan, deal with the loan. So for me personally, I don't really worry about the arbitrage. They're two different things. They're two different functions. I have guaranteed growth and ongoing growth here, and then I have a loan rate over here. So I don't look at them as arbitrage. That's just my personal way I look at it.
I guess I'm a little different. I do, but it just depends on what arbitrage we're looking at. So in the early years of a policy, you're going to have, like lack of, if you're comparing what your policy's internal rate of return is versus what the cost of borrowing is, you're negative, right? So what you got to do in the early years is you got to support that with where the money goes. And I tell people simple rules. When you take money from your policy, when you take a loan, if the loan rate is 5%, hypothetically, okay, then you got to send that money out to work at a higher velocity than 5% to make that spread, that arbitrage, if you will. Because if I got a car loan that's 6% and I can borrow at 5%, I make a 1% arbitrage, but I'm losing on the policy, because if I were to take the loan interest rate and the policy, then I'm losing in those early years. Because remember, we haven't had much compounding going on when you first start the policy. It's just getting off the ground. You've got the cost of insurance, which is not overshadowed, or what's the word? It's not beat by the compounding interest because you just haven't had enough time. These policies are not short-term vehicles. If you're looking for a short-term, vehicle, this isn't the place. It's just not. But it's in the long run, there's nothing that's going to trump this in this category at all. So you just really got to understand in the first early years, we train on this all the time. We do videos on this and math on this. You don't want to use the arbitrage from the policy to the policy loan. You want to use the arbitrage from the policy loan to where the money's going to work. And then also you have to have, for this, you have to have a legacy in mind. The death benefit has to be important for this to be, in somebody's, for it to really work for somebody. I'm tripping on my words because my daughter is here. But The other thing to really consider is the longer you go with this, the more premium you put in, the more you can take back the banking functions, the more this really starts to change your life, because you literally become your own banker, and then arbitrage really matters, but you just got to put the time in.
Harper's here supporting me too, so that's why there's a cat right here
Hey,
in the
kitty.
corner.
It's falling on my hand. Stop.
All right, Alan saying, a friend has 2 policies that I know weren't designed by this team. Would she be able to convert it to one like yours?
Well, Alan, it's a great question. And a lot of times, if you just have a regular old off-the-shelf whole life, if it's got some time, like if it's been around for a while, it's going to be super valuable the way it is. So we wouldn't look to replace it necessarily. We'd probably add additional policies depending on, what they're looking to achieve, like what they're trying to accomplish.
Yeah.
So Alan, I'd just add to Jason's point, make sure that she gets in-force illustrations, book a call with one of the folks on our team, and we can, take a look at that with her.
I had a client today who has, I think, 6 policies, Mass Mutual and Northwestern, and we did a side-by-side comparison while on a call, and doing a 1035 where they rolled the cash value over, and the new policies within like 2 years beat the old ones really fast. And some of them have been in place for quite some time. But yeah, it's just a comparison. It's got to look and see what makes most sense. Sometimes it means, like Jason said, leave them in place. So, but the answer is yes, they can be converted.
Wonderful. Paul's got a question saying, first is Guardian. The only one can you put a lump sum into anytime you want. How do I learn to create customized IBCs? I think it's when we were listing all of the ones that we cared, like that we liked in order. And then is Guardian the only one you can do like a dump in or a lump sum anytime you want?
You cannot. That's not, whoever gave you that information gave you bad information. You cannot do a dump in into any of the carriers, none, unless the policy is built to hold that dump in. So that is completely false, Paul. I don't mean to be rude about it, but whoever gave you that information, they're not giving them coal for Christmas, because that is terrible.
They're on the naughty list.
All the companies are going to be the same, within different changes, minor little tweaks and differences between the different carriers. But you have to build and engineer the policy to hold the dump in amounts you want. You can't just take an off the shelf Guardian whole life or any whole life and just start dumping money in. You will mech the policy. You might have a little bit of room to go a little bit more, but it's not just, hey, I got a bonus today, I'm going to dump a bunch of money in. It doesn't work that way.
Okay, so Terry Crutchfield, hey Terry, is saying, what does it mean when your base changes? So is that at year 10 or is that different?
Well, in my car, it's all computerized. You just go in and you just pump the bass up.
Hey Terry, so yeah, the base isn't going to change, but I think what you might be thinking about is when the premium changes, because there's a component of the premium that is base, and there's a component of the premium that's that paid up additions. The paid up additions at some point in life will either diminish or go away, and you'll just have the base left. So I think that's might be what you're after, is just when the premium changes. That's just to keep the policy from becoming a modified endowment contract, that taxable entity.
Okay, moving on. Matthew Diana is saying, I have a client that got turned down because of mental health by Lafayette, but I know them personally and they're healthier than ever. What would be the best way to get this client a policy in force? Great question.
I've had this happen. Client got denied because of the same thing. So, I would say the first way is get a policy on somebody else that you have insurable interest on. So that's another way to have a policy. And I think the other one, this other client, they're going to wait a certain amount of time and then go get another diagnosis, mental health diagnosis, and hopefully it's improved. And then if they're on medication, getting off the medications can also be a part of it. But once again, though, that's for a doctor to dictate.
I would say to Brian's point, it's going to be, whatever the client was turned down, they're going to be made aware of that. Like Lafayette would have sent them a letter. Insurance companies will send you a letter saying why you were denied. and then really following up with their practitioner, their doctor, to get, evaluated at the times they said, or even having, going back to Lafayette and seeing if you can get more clarity from the person that's reviewing that, like the underwriter. So,
Linus, you want to take a stab at that one? Because I mean, mental health can be viewed very different from one carrier to the next. So maybe now that if we've got all the medical records and we know what the denial was from, and if you don't, then request that from the carrier that denied it, then we can shop it with the other carriers and see if one of them can take or would be interested in taking it. Linus, would you add to that?
Yeah, that's exactly what part of my response would be is go see what we can get at a different carrier. But also it depends how long ago she got declined, or this client got declined at Lafayette, and also exactly what Lafayette's feedback was as far as like when they could reconsider and maybe what things need to be addressed before they can reconsider. Because if you have that information, it may be fairly easy to go out and get those things taken care of and wait the prescribed timeline and go back and reapply. So one or the other of those two would be great things to think about. But getting a policy on somebody else, if that's an option for you, may just be the easier option for the policy you need right now, right?
Yeah, and Matthew, one other thing I was thinking about is if the client has a term policy and that term policy is convertible by that carrier, we could take that to a Lafayette or a One America and see if we can get that into whole life, because if they have the term and it's convertible, they wouldn't need that medical. So that might be an option for them as well if they have that in their life.
The rebel in me and the justice seeker in me wants us to go to these carriers and be like, hey, we're your top dogs. What's up with this mental health stuff? And what are you going to do to change this? So I also think that if you guys go to these events, if with the carriers, do you guys mind asking like what is going on? Like as mental health is growing and people are seeing therapists more and doing a lot more, are you guys like adapting with that? I would love for you guys to ask that at those events with the carriers.
I see them, following the industry well, but a lot of the cases I see where there's a decline or a heavy rating from things like that is really just the client not having followed the doctor or the psychiatrist's recommendations, whether they did not take the medications they should have or keep following up with whatever's recommended. So if they weren't doing what's recommended, that's the number one risk factor for the insurance company right there.
Yeah, Sean, like you're saying, like I know we want to help everyone, get everyone approved. There's also a reason why they've been profitable every year, because they're really managing that risk and only bringing on the clients that are showing that they have the behaviors. And if you're not going to follow up with your doctors on a problem you're having, then you're not really exhibiting the behavior that's taking care of, like you're not showing respect to yourself and to the people you love in that way.
Yeah.
That's interesting.
Yeah, we don't want any dividend clipping going on.
I'm sorry, I lost my part real quick. Leah is saying, what are the different HELOC loan structures, the interest, like the interest rate structure? Like how there's principal and interest only is how I'm interpreting that.
Yeah.
Yeah, and I don't know if she means like,
I'm thinking fixed versus simple interest is what's coming to my mind, Craig.
well, and I was thinking about, some of the HELOCs you can do like a 5-year fixed interest rate and then variable after that. So if that's what she's after, but HELOCs generally are simple interest. You have second lien HELOCs, which would be you have a traditional mortgage and then you get a line of credit on your equity with a second bank and they put a second lien on your house, second lien position on your house. Or you can go down the route of a first lien position, which is the mortgage. And so you just have one lien holder there, but then you have a line of credit to your house. And that again is simple interest. And a lot of them will do either fixed interest rate structures or they'll do variable for say 5 years and then it can go, adjust from there. So let us know if that's kind of on board with what you're after, Leah, but those are what thoughts come to my mind.
Justin, what's up, Justin? Also, shout out Justin. He did several things with PMC. So we saw that. We love to see that. I know you're doing Noah's coaching.
Noah rocks.
Christy's mobile home course, and you're setting up your, I think, LLC with Brent Carlson. So good for you. And Justin is saying, when you first start a policy, they ask you about hobbies. What if you picked up a certain hobby that is risky, perhaps in their eyes after the fact? Do you have to tell them just in case anything happens?
Not after the policy is already active. Once it's active, everything is in place, it's done. There's no need to do anything further. If it's before you've actually placed it in force by signing it and funding it, then that is something that needs to be disclosed with them.
I would say you're probably fine. It depends on what it is. And so I don't know.
Way to take action, Justin. That's a lot of action all at once. That's exciting. That's how things get done.
I'm going to guess Justin drag races and pops wheelies in cars based on.
Oh yeah, look at that. Yeah, so you're right.
Me and Justin talk about cars all the time.
Yeah,
that's why he's asking.
He likes to go fast.
Well, honestly, if you have a risky thing, and then you have life insurance, that's what it's for, right? I don't know.
How could that be risky? It has a big, what do you call it in the back of it?
Roll
Right?
cage, you got fire suits, you got 5-point harness on your seatbelts. It's the safest thing you could do.
You can just tell the underwriter, you know what you're doing.
I'm a professional.
It's so dangerous, I just go really fast to get it over with.
Jewel is saying, what is the point to have so much policy? Why one policy doesn't allow you to use enough money to borrow? This is a great question.
I suppose one policy could, if you were independently wealthy and like dumped a bunch of money into it and funded it at high levels each year, but that isn't the case for about 99.9999% of the folks out there. So it's basically a component of what you can capitalize your policy with, like the whole life policy. Yeah. So whatever premium deposits I can put in now, today, that's what I can put in and that's what I have to use. Okay. So if I want to exceed that, so next year I get a raise, I got more income coming in, my private loans are making me more, I want to expand the amount of money I'm putting into the policies, into my banking system. What I do is I add another policy, which expands the amount I can put in premium. I mean, the name of the game is add more premium, but you add more premium as your income and your lifestyle goes up. So you can't add, infinite amounts of premium when you don't have the income to support it. So I think that's really one of the big things is throughout your life, you're going to make more money, acquire more things. Your net worth is going to go up. Your human life value will go up, which will keep giving you the ability to increase the amount of premium you have the ability to put into the policy. However, because of the MEC rules, the IRS rules, when we build a policy, we build it right to the threshold. So if you decided you wanted to save $10,000 this year, your policy is built to hold $10,000, not really much more, if any more. So when you want to put $20,000 in the next year, you got to open a second policy, $30,000 next year, and so on. And you just keep adding on to your banking system.
And I would add to that, Chris, that a lot of the folks we work with and the way we teach is this is a long-term strategy. People build family banking systems. And so as new kids are born into the family, you might get policies on them. So there's multiple policies, not just on a person, but there can be multiple policies in your family structure because you've got them on your spouse, your children, grandchildren, and it just keeps building because you have that legacy play in there as well.
All right. And then Justin chimed in that it was dirt bikes. And actually, when I was doing my application, I asked that, and it was really only if you were a professional or something like that. So you're good if you're riding dirt bikes.
You do it for a profession and you get paid to do it. Well, I have to take off, Shauna and team, so I'm going to let all of you do it. I got to go meet up with the little Viver. Merry Christmas to everybody. I'll see some of you before then, but for the rest of you on here, we'll see you after the holidays.
All right. See you.
Eugene is saying trying to get a policy with Lafayette Labs, maybe have been abnormal and a problem, and how does he fix that? Do we want to talk about underwriting and how, just in general, if you are going through this process, there is like that back and forth or questions about this, that, and the other thing, and paperwork having to go from here to there?
Yeah, so I read the same question from him further down. Says abnormal labs with Lafayette initially, problem fixed. How do I go about restarting? So that's great. You identified the problem and got it fixed. If you had applied with Lafayette, through us, anybody here at the Money Multiplier, we can go find out how soon you can reapply and if anything else was needed. Typically, you can just go reapply again. Sometimes they may have like a 6-month or a 1-year period before they'll reconsider. But this sounds like one that you should be able to go reapply right away. If there weren't other reasons for the decline.
I had a client who wanted to get theirs redone. They had an issue, they got it fixed, but they couldn't go back to one of the companies because they had a 6-month window where you couldn't go back again, like you're saying, Linus. So we went to another insurance company and they got approved with them. So
good.
There's an option there too.
All right. Thanks for finding that second question too, Linus, because I was looking at a different one.
It looks like Mike Salmon was working with Eugene, so you can probably reach out to Mike and get Mike to help him. So
Okay, great. I don't know if I see any other questions.
I'm seeing one from Boyd.
Oh,
It says, when you are in the underwriting process and they say they need to look at reinsurance, what is this reinsurance thing they might be referencing? So every insurance company has reinsurance partners that they work with whenever there is risk that the insurance company might not want to take on, or it's a bigger policy than what they want to put entirely on their books. Insurance companies call this risk. I guess it's financial risk to them if you pass away. Obviously, there's a death benefit they owe you, and all the financial factors. They call it risk. All right, and so reinsurance partners are basically other insurance companies that partner with them on the back end to spread out some of the risk. And so it just, like I said, spreading out the risk just makes everything more stable. Is kind of the way I think about it. Anybody else want to explain on that?
I think what you said, Linus, is spot on. And one of the things I think is important for policyholders to know is it's not as if you need to go do anything with those reinsurance companies, because everything would be done through the company that you originally applied for. It's just I think Linus nailed it. It's just a way for them to spread out some of the risk. And Linus and I were working on a fairly large case, and it got to the point where it hit the company's death benefit limits. And so they had to go spread that out with some other companies to be able to take on that case. So it's just a way. Let's say that Linus and Carson and Jason and I all had an insurance company, and Brian came and we thought he was kind of risky, but we all decided we collectively would take on the risk as opposed to me just taking it on. It's just makes it safer for everybody.
Yeah, anyone who doesn't wear Christmas hats on Christmas specials, you got to watch out for them.
I don't even have one.
I was wondering why he picked you as the risky one. That's all. So that's the first thing I noticed.
Just because he was up in the top center, so I just picked on him.
Yeah, I constantly take cases to reinsurance. So like if the primary insurance company offers a tobacco rating because of maybe some light marijuana usage, typically their reinsurance partners will offer non-tobacco rates. And so that's a great reason to go have them shop it with their reinsurance partners. And then sometimes if there's a bit of a health problem or something going on where you might get a table rating, I just do a little bit of preliminary questioning to see if, hey, would the reinsurance partners be able to offer a bit same or better? If not, then it's not worth trying, but sometimes it is.
Yeah, and Linus, I think you do a really good job of going up to that line of kind of questioning it without submitting it, because once you do submit it, you're kind of in the process. And if they come back and deny it, the whole thing could get denied. So Linus does a good job of, hey, hypothetically speaking, if there was a person that had this situation, would you do this? And I've seen that work out with you before. So it's, but yeah, I mean, sometimes it's a great thing because you do, like you said, Linus, you come back with a better rating than the insurance company alone would have given them. So.
Thanks. And sorry for overlooking you, Boyd. Boyd, I'll see you on Thursday for the PMC call. So tomorrow. So Steve is saying, hey, all, you are doing great work. Question, are you all graduates of the Nelson Nash Institute?
Brian, you are?
Yeah.
When did you get it?
I don't know, a few weeks ago.
Awesome. Congrats.
Congrats.
I didn't know you did.
Yep.
Absolutely. Yeah, just to be transparent, I'm not yet, but I plan to be soon. And so, yeah,
I thought you were like the first one. So that's
yeah,
amazing.
right.
No, I did. I thought you were done a while ago. For real.
Oh, really?
Yeah, for 100%.
No, it's going to be a next year thing for me.
Yeah, just so everybody knows, Chris pretty much told the whole team that by the end of this year that they had to be. So everybody is. So that's great.
Well, I would have been regardless of that direction.
Maybe Mr. Snaggy isn't yet. I don't know.
I asked him. He says not yet.
He's got
not yet.
2 weeks to get it done.
All right, I got to get Mr. David Stearns on the phone. I will be at the think tank though in Orlando. That's going to be a good one.
Don't study for it. That's all I did. Just study.
Okay.
Carson froze.
No, he didn't.
Just super still.
How's the Bears doing, man?
We can keep moving forward. What's the next question?
All right. Leah is coming back about the HELOC. She said, are all HELOCs simple interest then, simple fixed, or simple variable? I don't trust the banks, basically.
You shouldn't.
I don't know the answer to that question. I know there's certain durations, all that kind of stuff, but I don't know.
Yeah, I mean, the ones that I've used have all been simple interest. I don't know what other kind of structures are out there, but the first lien HELOCs are definitely a simple interest as well. And like I said before, you can get a fixed for a period of time or a variable, fixed and then it switches to variable. So, but there's a lot of different mortgage products out there. So I don't know if maybe there's something else you're looking for.
Also, Leah, our HELOC guy is not on today. And so if we're going to be off the next 2 weeks because of the holidays. But so let's say January 8th, bring the same question back. And we'll see if Joe has any insight on that. All right, guys. I think we're through it.
We did it. We made it.
Wow.
We still got some time, though, if you all have some questions.
I was curious about the reinsurance part. In terms of reinsurance, if a company shares risk with you, does that also mean they take some or they share the premiums they receive on the policy?
That's a great question, Carson.
I was told yes.
From what I've seen, it's usually going to be a case of the primary insurance company outsourcing the entire policy to their reinsurance partners. So the client is still working directly with the primary insurance company as if there was no shift of risk or anything. But on the back end, the entire policy, and I would assume that would be the premium and everything, except maybe some servicing fees that are getting paid to the primary insurance company. But I believe the reinsurance company would be covering getting everything. The whole thing is going on their books, I believe.
Oh. So would it matter if wouldn't we want to know who that reinsurance company is then to look at their financials?
Well, your contract is still with the original company. So if you say you go to Lafayette, your contract is with Lafayette. They're the ones guaranteeing the contract. They're the ones on the hook for the death benefit. Even though they've got a reinsurance partner in the back end, they're still on the hook.
They're subbing out the risk.
So, I mean, I think your point is really good, Carson, because you want to know who you're working with and your viability and their ratings. And so, but since you would be contracted with that company we applied with, that's who's really on the hook.
Makes sense.
Yeah, Boyd is following up there. And when you look to challenge the table rating in future years, if the round hit reinsurance, then likely future rounds would also hit those reinsurance people as well. I don't know for sure. That would be my guess. If your current policy was underwritten with the reinsurance partner, that's probably the case. So I don't really know the answer to that.
I think you're right, Linus. Like I did see something recently where somebody was doing something and it did have to go back through reinsurance because that's who it went through the first time.
Yeah, that would make sense.
And then Anderson is saying, any recommendations on companies that do first lien HELOCs?
We do.
The policy, sorry, real fast. The policy is still through the insurance company though. So even if it goes through reinsurance, to Tessa's point down there, it is still the insurance company that's going to do everything. But I did see they did run it back through reinsurance. So I think there might be a little caveat there. Sorry, I saw Tessa's comment.
Yeah, no, that's good. So at Anderson DRA, I use CMG Mortgage. So the nice thing about CMG Mortgage is they work in some of the community, what do they call them, community property states like Texas, Oklahoma. They also will allow you to do a first lien HELOC on rentals. I know Joe uses the First Bank of Tennessee, so we've got some good relationships with them as well. So we can always connect you with them. So they're a great company to work with.
Yeah, he told me it was firstlienheloc.com.
Yeah,
that's what I said. Firstlienheloc.com, I think, is the Tennessee one.
Yeah, it's First Savings Bank in Tennessee. So, I mean, we're not giving financial advice, but that's who I used for my first lien HELOC. Put it in place a couple months ago. So.
The one thing I like about the way CMG structures theirs is they'll do a 5-year fixed, and then they'll do a variable on after that 5th year. However, a lot of companies will go to market rates, whereas what CMG does is they'll bump it up 1% a year up to a max. So if you did have a first lien HELOC for 5 years and then it bumped up to that next year, you can absorb 1%, but if you had to absorb 8-9%, that would suck.
And did we hit on any recommendation? Like, did we hit the? I don't know what the name of it is.
The companies, yeah, I just said CMG, and then Brian said firstlienhelocs.com.
Okay.
Yep, so we're good there.
Okay, so Chris P is saying in his book, Nelson says premium and income should match. And I've heard him say building that might take 20 years. How many of you accomplished that goal and how long did it take? I didn't.
Premiums and income should match.
Has anybody here been doing it for at least 20 years?
15, but I know of some people that have done it, but I don't know. I mean, it does take a long time to build it because you got to build the multiple policies. And there's a group that was in the Nelson Nash Nuggets. So when you're a practitioner, you get to go to these meetings, and there's a group there that they call them the 100%ers, and they've done it. So people have done
cool. I've never heard that before, so that is cool. Learn something every day. And Chris, it's a great question. I mean, I've seen some of our teammates have built, things that might take people 10, 15 years in 3 or 4 years just by being super aggressive and already having a really good way of making a lot of money in the first place. And now they're just adding IBC as that foundation. So it kind of depends on where you're starting. So
He said it's on page 48.
Yep.
Knights of Israel saying, can you have the policy fund itself and still be good for IBC?
I'm not quite sure what that means.
Well, like if you were to, Yeah, go ahead, Craig.
I was going to say, take a look at Becoming Your Own Banker, Nelson, written by Nelson Nash on page 51, where he goes through the equipment financing model, because he shows you exactly that, where the policy needs to be capitalized. And so what Nelson Nash was showing is capitalizing the policy for 4 years, and then it starts to fund itself. But you, as a banker, are still adding premium in by taking the same amount of financing you would have given to a bank or a finance company and running that back into your policy. Some of that goes in as premium. But the base policy that he starts with on page 51, he just shows you capitalizing using the dividends and any cash value surrendered to support the policy for the rest of your life. But then what he does is he goes through, okay, now let's finance a truck with that policy. Let's finance 2 trucks with that policy. So you start to see the benefits of financing and being your own banker adds cash value into the bottom line. But it's a long way around of saying, read the equipment financing, study that. It's an awesome example. But yes, you can have the policy fund itself, but we want to use it for financing and do the right thing with it.
Yeah, I mean, Craig's giving an example of the thinking, but if your number 2 rule is don't be afraid to capitalize, and you're asking, can the policy fund itself? How are you capitalizing it? You're not, right? So just from that straightforward thinking, you have to capitalize the system for it to be the most optimal with IPC. If you frame everything in Nelson's thoughts, I've been doing this a lot lately, guys. You probably do it too. But number 1 is think long term. Like when I hear Marty talk about, hey, it costs you nothing, and when you get to year 10, it's actually true, right? Because every dollar you put into the policy is now equal to your cash value. It might be your 8, 9, 10. But if you frame it in that thinking, 2 being capital, don't be afraid to capitalize. 3 be don't steal the peas. 4 is what? 4 is don't use outside lending. And then 5 is rethink your thinking. If you keep framing all of these questions we're asked in those frameworks, it makes it pretty easy to know the answer. Just a thought.
Not sure what you did with your audio too, Jason, but it's very muffled. So something's covering it maybe.
Weird. Better?
Yeah.
Yeah.
Probably too far away.
My microphone is the penguin. Testing 1, 2, 3. Testing.
Those are the ones Nagy told me to get. Works pretty well. Haven't upgraded to the next
Sounds good
one.
now.
There you go. Thanks, guys.
Yeah, I do. I got that one. Look.
Yeah, you told me to get this one.
It's just so simple, man. Everybody's got these like crazy things that come down, these arms and booms and hang in their faces and everything. It's like, I don't know about you guys, but I don't want that thing in my face. But anyway.
And we'll end on that.
And drop the mic. There it goes. Way to be.
No, we're gonna give
Glad
Chris.
to be here today. You're welcome, guys. Thank you. Thank you.
Yeah, we'll give Chris a shout out though. He said, "I'm 6 months new to the process and still trying to understand it all, but results are better than expected, and I already have plans to add policy number 5 and 6."
Nice.
Heck yeah.
That's usually how it happens. We have 91% of the people that actually start will come back and do additional policies in the first year. And a lot of them end up like Chris and doing 4, 5, 6 policies in the first year because they're like, wait, this really works? This is true? I can do this? Well, I got a lot of family members. I got lots of kids. Let's get it going. So pretty normal. MPI.
Jewel is saying, so I got a MPI policy, Curtis Ray, and after I found this group and all the policies I could buy instead, can I buy a policy from you with the knowledge I got from this group that suits me best?
Maximum premium indexing.
Okay, thank you.
There you go. Yeah. I would just recommend scheduling a call with one of our mentors.
Crooks. No, what? Who said that?
Yes, and I'll put our link in the chat. So it's mentors.beyourownbanker.com, and that's how you get on the phone with. It will give you one of these guys on the screen based on your time. All right, guys.
We did it. Another year.
Merry Christmas, Tracy, and everybody else.
By the way, if anybody's wondering,
we got to take a vote. By the crowd. We need votes. Who's the best dressed? Who's the best outfit? The best Christmas person.
You got to give it to Jason. Come on, guys.
Let's talk about this. Let's talk about this. Shauna's got the cool lighting going, and that Christmas Mrs. Claus sweater thing she's wearing. We got Brian Fail. Linus. Linus is looking good with the bib. I mean, of course, Jason's got the full tie and everything, but I mean, just out of purely like sexiness. Come on, guys, give it to me in the comments.
Sexiest. I'm going Craig Yenny with the little white in his beard and the penguin.
That's natural.
Like a mascot with him.
This is natural. This is real stuff right here.
Penguins. I mean,
you and I obviously are shopping from the same Florida, the same Florida store, Snaggy.
Yeah, clearly, for sure. You only get those jackets in Florida.
Who likes candy canes?
Oh, we got a Linus. Oh, we got two.
Alan says the shirt does it, man. There's got reindeer. We got Santa surfing.
Brent Burdick, I thought you were my boy. Blue.
Dude, Linus wins 2-1.
And I'm just going to keep this in mind when I see you guys at live events. Who's going to get beers bought for them at the bar or not? So keep that in mind. Come on, see some Steven go.
What a poor loser, man. That's awful.
We only get what, 3 votes?
See that.
There's only 3 votes.
Vivi.
Oh, we got Vivi.
Here.
Mark, I agree with Mark. All right, but hold on, guys. We do have one question, and it makes me feel bad if we leave without doing it. So Paul is saying, I understand that my age 50, I would pay about $500 monthly. Would I have to increase that overpay for 10 years? Which hopefully fund itself.
Just clarify the whole minimum 10 times.
Paul, go read this book because you're asking questions as if it's a payment versus as if you're making a premium. And you're asking questions that show that you're getting there. And we're glad you're here, but go read this book.
Yeah.
You need the
you'll ask a different question.
You got the 5th edition. I got the 7th edition.
I got the 50th.
Yeah, but you still haven't read it, brother.
Wow, that's not true anymore.
Hey, wait. There's some cool voting going on. I got 2 votes right now.
I know, I saw that.
I'm loving it.
Ooh, Craig got a couple. See, they're coming in.
Yeah, it's the beard.
Oh, another Yanni. Holy cow. I think it's like a 3-way tie right now.
I know it's hot, though. It's hot.
Actually, here, I'm going to win it because I have master control.
Oh, whatever.
Wow. This looks like I demand a recount.
Yeah, those are those 2 a.m. votes, man.
Hold on. Those are the Democrat votes. I got you.
I'm voting for Yenny. I like Yenny's.
So Paul's asking what that book is, Jason. Can you just show the book again?
Gotta head out. Yeah, see ya. Merry Christmas.
Merry Christmas.
Hey, Carson. Merry Christmas.
I'm going to go hop on a team call. Merry Christmas, everybody. See you guys next week.
Merry Christmas, Brian.
Right. Merry Christmas, guys. Thank you, guys. Thank you.
Christmas.
Merry Christmas, everyone.
See you all next year.
We'll see you in 2025.
Oh, before you shut off, Shauna, you're wondering if there's going to be a Founding Fathers tomorrow and the following Thursday after Christmas. There will be. So we'll see you guys on the mat. IBC training week 7 and 8 are coming.
Okay. Oh, Mark, I missed those chocolates. Thank you.
Ooh, send me some of those.
Thanks,
they
Mark.
were really good.
Appreciate
They're
it.
from Hawaii.
Those were tasty.
Be blessed all. Merry Christmas.
Hold on. Voting's not done yet. People are still coming in. Oh, there's another.
Oh, my God. All right.
Hold on. People are still coming in.
Maggie, you are a rare find. Love it.
Bye.
All right. See y'all.